From the floor of the CME Group, I'm Peter Yastrow. This morning, we are looking at Washington. They are supposedly close to getting a deal done. Yay! But what does it really mean? I mean, do we really think that a United States Treasury security is less risky than a corporate bond from GM or from Johnson & Johnson or from General Electric? It seems to me that the person who gets paid back is the person with the biggest army and the person who can levy taxes. I don't think there's really any problem with a downgrade to the U.S. debt from an investor standpoint. The problem comes from the legal standpoint. If you have a law that says you are not allowed to hold securities that are not AAA rated, well, then you've got a problem because the United States government securities are no longer AAA rated. Maybe they'll just fix that by changing the laws. One of the thoughts going through the market is that they won't puke all their securities and take the losses and run for the hills. They'll just change their laws and say, we need to hold AAA securities and or U.S. government securities, because in the end, if the U.S. government can print dollars, tax dollars, and has such a huge army, they'll always be able to pay their debts. It's just a question of whether or not they'll do it. So meanwhile, in Washington, they are wasting our time, jerking us around, waiting to get a deal done. Why is it the debt limit at this number? Because it's an arbitrary number. They said it a few years ago. No one knows why it's exactly at this level. It doesn't make any economic sense. It's not a number that was derived from scientific theory. It's just how the lawyers and lawmakers got us there. Now they're asking about pushing it higher. Just push it higher, guys. Stop all the nonsense. It's really silly. If they were to let us default, if they were going to not make all those payments, all the Social Security checks don't go out, all the government bills that don't go out, it's just a huge pain in the neck for everybody. But in the end, it's not going to be what Obama said it was. It won't make everybody's mortgage higher. It won't make everybody's car loan higher. It's not going to have that kind of effect. The lawyers will rewrite their rules. They'll get around it. And meanwhile, the United States is going to raise the debt limit. We're going to push it out a little bit longer. We really have no other choice, and it's the proper thing to do. That being said, what happened to stocks? Why do they get hit so hard? The technicians are all agog. We had a double top. We failed. We couldn't make a new higher high. That gets everyone all excited because when you don't make higher highs, well, then obviously you're going lower. So they started selling them. We came right down to the old 50-day and 100-day moving average and basically overshot yesterday as if we had a bad close, but we came back and are trading in that range today. Look for the 50-day, 100-day moving average in the S&P to hold. That's about 1311 to 1317. Look for that range to trade a lot. I mean a lot over the next few days while we wait for Washington to clean up their mess. If stocks hold this range and don't make a lower low, be careful. It could be coiling for the huge sell-off down to the 200-day moving average. We'll keep you posted. Please check it out on peteryastrow.com. Good luck, everybody.